That's tough. We always talk about why traders fail, and it's not because they can't trade. It's not because they can't spot setups. It's because of trading psychology. And patience and discipline is a big part of that. It's really tough. We talked about not only having the discipline to, get whipsawed around like I did yesterday, but the discipline to follow your rules and wait for good setups. Understand, I did not get a lower low, lower close here, right? So guess what I have to wait for? I have to wait an entire hour to take this trade, if I even take the trade. So I've got to sit on my hands for an hour. And guess what? If you're trading on higher time frames, 4-hour charts, right? An hour now becomes 4 hours. A daily chart that becomes a day. And there are many cases where you're waiting for a potential trading opportunity, especially if you're a swing trader, and you're waiting days for something to happen. We can go back to the pound yen opportunity, right? I brought this to your attention on Monday, right? I think it was actually on the daily chart. On Monday on the pound yen, right? Waiting for this level to get hit. There are chances, or there are times in the market where you may have to wait a year. Not a year. Sorry, I'm thinking ahead of myself. But you may have to wait weeks. You may have to wait a month, right? You may be in trades for a year, but you may have to wait a month in order to get a trading opportunity. And that's very, very tough. And it's one of the reasons traders fail, because they don't have patience. They see it and they look at it and like, I just want to get involved now. I don't want to wait until I got to wait 4 hours. I'm just going to do it now. Right? They look at something like, again, going back to the Aussie dollar situation, they look at something like this, right? And then what happens? The market starts rolling down and they start freaking out. Oh, I'm going to miss the trade. I'm going to miss the trade. I'm going to miss the trade. It's going in my direction. What do we do? What do we do? And then you enter it. I'm just going to sell it now. Whatever. I'll sell it now. And then this candle ends up being, right? Ends up looking like this, where the market spiked down and then completely, right, retraced. And now you come back. You get a losing trade. You get stopped out and you ask yourself, should I have ever been in this trade to begin with? And you look at it and you say no. And now you've lost what? Maybe 50, 100 pips just because you were too impatient. So it is tough. It is tough, and it's something that you have to learn to deal with. And that's why discipline is key. Discipline is key. You've got to learn to trust your plan. Follow your plan, have it, close the screen, look at something else. And I wish there was a shortcut around it. I wish there was a super secret technique that I can tell you guys that would fix it. But there's not. Do something else. Yeah, seriously. Do something else. If you're a swing trader, right? Watch Netflix. Right? Play a video game. I remember Jason Stapleton used to do this. He used to teach himself how to play the guitar. Take music lessons in between trades. Do back testing. Do whatever you got to do, right? Because in this scenario, again, and sometimes you won't know. You may need an at market entry, so you'll be waiting for the market to do something specific. But if you know that you need to wait for a certain time to execute a trade, you know that right now it's 9 o'clock. There's absolutely nothing that I can do until 10 o'clock. So I'm going to do something else instead of stare at this chart and drive myself crazy. So that would be my best advice on it. But it is tough, and that's why a lot of traders fail. They have that need, the desire to be in it. They don't want to wait, right? In general, in the world right now, we're all about instant gratification. And then the worst thing is, once you're in a trade, you may be in it for days and weeks. And during that days and weeks, it's not just prettier. You're not just in it and it's up money, right? You may be up on Monday. You may be down on Tuesday. You may be up again on Wednesday. You may be down on Thursday. You may be going up and down, right? In order to get down to, say, this level, market may do this, right? All of this may happen before it gets to here. And you've got to be disciplined enough and patient enough to see that out. And that's why 90% of us don't make it. Will be the cold, honest truth. Most traders don't make it because they can't do this. They're not built to do this. You know me and math. We don't have a good relationship. All right, New Zealand dollar. This is a pair I like for trend continuation. I mentioned the Aussie dollar earlier, and I had the wrong pair by mistake in the quick hit video I did. This is the pair that I still like for a trend continuation to the downside, just because of the fact that our most recent move was what? New structure lows, right? Our most recent move was new structure lows. Our next level of structure isn't until down here, 67 cent, right? So this is one where, let's say we get a similar move as Aussie, right? Let's say we can get up to this level. If you're a trend following trader, and I'm not telling you to do this, right? I'm not telling you to do this, but you can potentially set yourself up with a trade where your stops are probably up here. It may not even be this high, but let's say you're entering off a daily, you get them above 73. Your stops can be above 73, and you can easily shoot for target ones at a retest of lows, right? Your target twos can be at a retest of previous structure lows. This is, if you're a trend following trader, this is what you do, right? You shoot for extensions. Now, you want to talk about discipline and you want to talk about discipline and being patient with a trade. This is one of the reasons I'm not a trend following trader, right? Does that make sense, guys? This is one of the reasons I'm not a trend following trader. Not only are you dealing with a lower win percentage because the market doesn't trend as much, right? The market only trends about 30% of the time. We're in consolidation about 77% of the time. So you have to deal with a lot of losses and hop right back on the horse, right? Horse knocks you down, get back up. Horse knocks you down, get back up. Horse knocks you down, get back up. Ride that bad boy for that one win. That's very tough mentally. But you've got to deal with stuff like this. You've got to deal with the market going all the way up here, breaking structure, coming all the way down here. And we know that in reality, right? Reality, does price action do this, guys? Does price action come straight from these highs to these lows, right? 500 pips down? No, price action does this. Down, break even. Down. Oh, yes. It's going to win. Break even. Oh, no, it's consolidating at structure. Down. Oh, we're going down. Back up. Oh, no, I was up 300 pips and now I'm only up 100 pips, right? Oh, no, higher high, higher close, right? Price action tends to do something like this. And you've got to sit in that thing the entire time. You've got to ride this out. Now, there are trade management techniques that can make it easier. You can reduce risk or lock in profits on the way down there. That makes it easier. But that brings its own psychological battles. We won't get into that. That's a whole nother lesson of the pros and cons of actively managing your trade. But it's tough. It's tough. You're looking for a move like this. You've got to wait for it a long time, right? You're not always going to get this pretty move right here. If the market's trending beautifully, maybe you do. Maybe you get 1, 2, 3, 4, 5, 6, 7, 8 days straight down. But typically, right? See if I can find an example here. Typically, it's more of a mess. Typically, it's something like this, right? Where you buy it right here, and then you're like this. Hey, uh-oh. And then you're just churning and churning and churning and churning. And the market's giving you every excuse to get out the trade. Come on, get out. I dare you. I dare you. Just do it. Just do it. Take your money. And then only those who wade into it, right, end up seeing that long-term value they wanted to see. And most traders are out by this part because they sabotage themselves. So following up on the discussion we had on patience earlier, it's even tougher if you're a trend continuation trader. That's one of the reasons I when I started trading, I gravitated towards a counter trend technique. It's in and out. I used the cookie jar example where I see the cookie jar, right? I try to sneak in, I try to get a little crumb, and then I try to get out without getting caught. and just consistently execute these little trades like that, instead of waiting and waiting for that right moment, getting caught a few times, but finally hitting that, grabbing the full cookie. And I'm not saying there's anything wrong with trend following. You can see, risk reward is absolutely ridiculous. Right? 1, 2, 3, 4.5 to 1. It's ridiculous. How many times can you lose versus the times you need to win, right? 1 out of every 4 trades, and you'll be profitable like this. The problem is, mentally, people aren't able to see their trade reach its full potential when they do get that winner, because they're so scared or so undisciplined that they sabotage themselves and take profits early or something like that. This is a good opportunity. Yeah, I would look for trend continuation here on the Kiwi. At this point, I would just wait for like Aussie dollar. I'd wait to get to that resistance level and take those days of waiting to start fine tuning your plan. Now, we do have a double top here on the 60. We're at a level of absolutely no interest, so I don't really care about it. But 26.18 traders, if you do get a break and close below, you can look for a potential 26.18. Just laying out the options there. Let's go down to the 15-minute chart. 15-minute chart. I tell you what. All right. I tell you what. Here's something else you can look at, right? Where are we anticipating that price action goes? And this is going to be a little bit risky because it's going to be technically counter trend. It's going to be trend continuation, but counter trend. But where are we anticipating that price action goes? I'm recording all this too. This is going to be awesome. Everything is awesome. All right. DSR box, right? So we're saying this is where I'm looking for that next potential trend continuation opportunity to the downside. And if I'm confusing you guys, just try to turn the brain off and just sit with me for a little bit, right? So we go down to our lower time frame. We're day traders, right? Day trading, the trend is exactly the opposite. We're in a heavy bullish trend, right? Would you guys agree? Day trading wise, we're in a heavy bullish trend, despite being in a bearish trend, right? You can anticipate price action going to that level. And as a day trader, right, with the anticipation of price going to this level, as a day trader, you can look for opportunities to get involved in advance of that move. So as a day trader, you can lock your sights on a bullish opportunity in advance of seeing price action hit that higher level that you analyzed on the higher time frame. Follow me, guys? Too much? Okay. Especially if you're newer. Sorry, that was a lot. Chad is one of our transformation members, so we've spent many a training lesson going over stuff like this. Essentially, you can, as a day trader, you can get long. Based off of the higher time frame analysis of the level that you would expect to be hit for your potential short. So you can look for a bearish breakout or a bullish breakout here. And again, there are 3 ways to trade this breakout. Buy stops, just trying to catch the breakout straight up. You can wait for the breakout, the return to structure, right? And then a chance to buy it up like that. Or do like what we did with pound dollar before we were whipsawed out after making the right prediction, but market spiked because Trump was going crazy. Right? Look for a move to come back to the bottom, the lows of these channels, and then set yourself up for the anticipated breakout that way. So it's definitely break time. That was a lot. That was a lot. I know. I'm sorry. But I'm here every day, and I do the same analysis every day. So you stick with me. It'll start the terminology. It'll start making more sense. I promise. So for you guys that got lost, don't get discouraged or anything like that. it was just a lot in a very quick period of time. But it's okay. It will make more sense once you learn this stuff. Chad says this, and this is going to the conversation we just had. He said, to all of the newer people, it was only a few months ago that I had no idea what any of what Akil and the other traders were saying. Wah, 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 wah. So I just kept showing up to the live sessions and paying attention. Then I started catching on little by little. I still have a long way to go, but it makes me smile every time I hear or see something and understand it. It's amazing what you can accomplish when you show up and put the work in. I love this stuff. And the only reason it's tough right now for many of you guys that are new, because you don't know the order in which to put it together. One of the things that we do in our training courses is we lay out each lesson, I guess you can say, in a specific order. So each one builds on the next. So instead of just feeling like it's everything coming out of a fire hydrant at once, it's you learn this, which seems simple and insignificant. Then you learn this, which seems simple and insignificant. Then you learn that seems simple and insignificant. And you learn all of this stuff that seems simple and insignificant. You're like, well, how do I trade this? What does this mean? Why do I do that? I can't trade this. I can't do that. And then you get to the point where it all comes together. It's like buying all the separate ingredients at the grocery store, right? Where by themselves is like, why would she buy that? Okra? What? Garlic? Why is all this random items? And then when you put it together, it makes this delicious meal, and it all starts to make sense. And then once you make that delicious meal, you can throw all of this stuff together, and it just allows you to understand it more. So that's one of the benefits that certain people have that have been here. They understand where I'm going with it all, where for many of you that are new, it may just sound like a million different weird terms put together for no rhyme or reason. So that's why I don't want you to be discouraged. I don't want you to be discouraged and think that, hey, I'm not smart enough to do this, or man, I didn't understand anything he said, so maybe trading's not for me. That's the last thing I want you guys to think.